So this morning we're going to take a look at this Abel Limited question. It was a question actually from the old specification. It was from the, you can see the little code down here, the ACCN4 exam from June 2019. I'll leave that on the screen in case anyone wants to get a screenshot of it, because it's actually been quite difficult for me to find a link to the original question paper. That's the first part of it. That's all the information you're going to need. The question, calculate the budgeted profit for April 19. Calculate the actual profit, and then work out sub-variances for materials price, materials usage, labour rate, and labour efficiency. Right, so this is a fairly standard, pardon the pun, standard costing question. They operate a system of marginal costing, which is based on standard cost data. So remember that the standard cost is where we set the cost in advance, so the cost for direct materials, the cost for direct labour, and if we were doing it on an absorption costing basis, we would include overheads, but this company uses marginal costing, and they give you some information about direct materials and direct labour. So direct materials, each unit, so 1 unit of product requires 8 metres at £4.50 a metre, and then the direct labour, they take 5 hours at £8 an hour. So we could find the unit cost here if we multiply up the, let me just turn my calculator on, the 8 metres at £4.50, that gives us £36, so it's £36 per unit, and 5 hours at £8 is £40. I can do that one without the aid of a calculator. Okay, the budgeted selling price is calculated to give a profit margin of 20%. So if we take the cost there, the two costs added together, that's your variable cost, and we're doing a profit margin of 20%. That means, so if we've got sales minus cost of sales is gross profit. If you know one of these figures, and we know that cost of sales there is £76, we don't know what sales is, and we don't know what gross profit is at the moment, but we do know that the profit margin is 20%. So that means that the gross profit is 20% of the sales figure. So sales is the 100% figure, and cost of sales represents 80%. So if we know cost of sales is 76, if we divide that by the relevant percentage, in this case 80, and then multiply it by 100, so 76 divided by 80 times 100, that gives us a selling price of £95. Okay, and then the gross profit is the difference between the two, 95 minus the 76, that gives us a gross profit of £19 per unit. Okay, so that's the standard data. Fixed production costs were budgeted to be £27,000 per month. Now just make sure you always clock the time period. Make sure that, if you're doing monthly accounts like we are here, that we've got the information for a month. If they tell you what it is per annum, then obviously divide that by 12, and they're quite good at doing that. Budgeted production and sales for April 2019 were 4,000 units. Now remember, because it's marginal costing, we don't hold inventory, so that's one of the issues with marginal costing. It assumes that everything we make is sold, which obviously in real life is highly unlikely to be the case. And then they've given us some actual data for April 2019 about the number of units that were sold, and the fact that they were sold at the budgeted selling price, which we've had to work out there, £95, how much material they've used with the total cost, and how many hours it took to produce the 3,820 units, and at what cost, and then the fixed production costs, which we can see are slightly under the budget. And it does just reaffirm there that there was no opening or closing inventory of direct material, so that correlates with the fact that the 3,820 units were produced and sold. Okay, so we've got to calculate, first of all, the budgeted profits. We can ignore all of this information down at the bottom. So the contribution per unit, £19, we could do it straight from contribution. So the contribution is £19 per unit, and that's times 4,000, which was the budgeted output. Okay, so contribution 19 times 4,000, work it out, is £76,000. Okay, if we take the fixed costs off of that, which were £27,000, we've got that up there, that gives us the budgeted profit, 76 minus 27, which is £49,000. £3,000. Okay, so that's 3 pretty easy marks just by using this. But just be careful when it tells you about a profit margin of 20%, don't go multiplying up the cost of sales figure that we've just worked out there, because that's markup. So if we were adding 20% to that 76, that will give us a markup of 20%. They're telling us the margin here, so we have to work backwards. So just remember, stack up your figures: sales, cost of sales, gross profit. We know that sales minus cost of sales is gross profit. And if we know one of the percentages and whether it's markup or margin, then we can work out the other missing figures. If it was based on markup and you had, for example, the selling price and it was a markup of 20%, then the gross profit would be 20% of the cost of sales, which would be 100%, and therefore the selling price would represent 120% of the cost. So if you knew the selling price, you could divide it by 120, times it by 100. But that's just a reminder. We don't need to do that in this case because it's margin. Okay, the next part of this question then is asking us to calculate the actual profit for April 2019, clearly identifying contribution and profit for the month. Okay, so what I'm going to suggest we do here is go right back up to the sales figure. Now, we're told that they sold 3,820 units. Let me just show you that again. 3,820 units at the budgeted selling price, which was £95. So the sales are 3,820 times £95. So that's going to be 362,900. Okay, the direct materials cost and the direct labour are given to us here. We don't need to worry about the quantities or anything at this stage. That will come when we do the variance analysis. So if we take away the direct materials, that was 148,044. And if we take away the direct labour, they haven't given us an awful lot of space to do this in, have they? The direct labour, 182,102. 182,102. So let's take both those away. That will equal the contribution. And they've asked us to identify that clearly. So let's write it in nice big letters. Contribution, difference between those two, so 362,900 minus those two there, is going to leave us with 32,754. Okay, and then we're going to take off the fixed costs. And again, it's the actual fixed costs, not the budgeted fixed costs. It's all on the actual 26,850 given to us in the question there. Okay, and that will give us, I'm just about to squash it in there, profit for the month, difference between the 32,754 and the 26,850, which is going to be 5,904. Okay, so a couple of marks there, nothing too difficult provided you'd worked out the selling price correctly. Okay, right, the next thing we've got to do then is deal with the variances. We've got to calculate the direct material price variance, direct material usage variance, the direct labour rate variance, and the direct labour efficiency variance. Now, I'm going to use this as an opportunity to recap the formulas. Now, if we're dealing with the price variance, you want the prices in brackets. So you want standard price minus the actual price. And that's not per unit. That is going to be per metre or per kilogram, whatever it is. So in this case, it's metres. So per metre. And you need to times that by the actual quantity. Okay. For the usage variance, it's the standard quantity. And the standard quantity needs to be for actual production, not the standard quantity for the 4,000 units we plan to make, but the standard quantity for the, how many units we made? 3,820 units we did actually make. So it's the standard quantity minus the actual quantity multiplied by the standard price. That will give us our usage variance. And remember, the two added together or offset against each other will give us our overall materials variance. And then the direct labour rate variance, because it's rate, we're going to put the standard rate and the actual rate in brackets. And if you do it this way around with an expenditure variance, if you get a positive in your calculator, it's going to be favourable, and negative will give you an adverse variance. So the labour rate variance, the standard rate minus the actual rate, times by the actual hours, so the actual number of hours used. And then the efficiency ratio, the efficiency variance, so the labour efficiency variance is about how many hours they took against what they should have taken. So it's the standard hours. And again, we need to make sure that that's for actual production. So we don't want the standard hours in there for 1 unit. We don't want the standard hours in there for 4,000 units. We want the standard hours, how long it should have taken them to make 3,820. So we're actually flexing this budget. So the budgeted information is given to us here for 1 unit of product, and they tell us that they were going to make 4,000 units. We would only need that one for the sales volume variance. If we're not doing a sales volume variance, then actually, apart from calculating the budgeted profit, that is irrelevant. Okay, so back to this labour efficiency variance. It's the standard hours for actual production minus the actual hours, and then we're going to multiply that by the standard rate. Okay, so we can see here that we need to find a few things. So let's have a look and see if we can find how much we paid for the materials and how much we paid for the labour. That's always an easy one to do. So 148, let's turn the calculator on, 148044. If we divide that by the number of metres, 33,800, that gives us a cost of £4.38 per metre. And if we do the same with the direct labour, we've got 182,102, and we're dividing that by the 21,940. That gives us £8.30 per hour. Okay, so that is the actual price that we paid for the materials, and that one is the actual rate. Okay, this here is the standard price, and this here is the standard rate. Right, completely blank for a moment there. If we want to find the standard quantity, it's 8 metres, but it's not times 4,000 units, it's times 3,820. So 8 metres times 3,820 is 30,560 metres. And we can see here that we use 33,800. So already we can spot there's going to be an adverse materials usage variance. With the labour, it should have taken, so the standard hours is 5 hours, and again it's times 3,820 units. 3,820 times 5 hours is 19,100 hours. That's your standard hours. And if we have a look here, it should have taken them 19,100, actually took them 21,940. So we're going to have an adverse labour efficiency variance. So what we can do now, let's just move my calculator out of the way, is stick all of that lot into our formulas over here. So the direct materials price variance, remember the standard price we worked out here, well, we didn't have to work it out, it was given to us, £4.50, minus the actual price we paid, which was down here, we paid £4.38. Okay, so we can see that actually that's favourable. We've paid 12 pence per metre less than we planned, and the actual quantity used is 33,800 metres. Okay, so if we multiply those together, so the £4.50 minus the £4.38, whoops, is the 12p variance times 33,800, gives us 4,056, and we must label this variance, it's favourable, because we've paid 12 pence less. If you look at my calculator, it's a positive figure in there. Okay, we can do the same for the usage variance. So the standard quantity, we worked out standard quantity for actual production, the 3820, is 30,560 metres. 30,560. The actual quantity used is down here, 33,800. Actually, we used it up there as well, didn't we? 33,800. And then the standard price per metre is this price here, £4.50. So if we multiply that up, we should have used 30,560. We actually used 33,800. So somehow we've wasted 3,240 metres, and each metre has got a cost of £4.50 because it's the standard cost. So we've actually got an adverse, apologies there, an adverse variance of 14,580. So we paid less for the materials, but we wasted a whole lot more. Okay. Onto the labour rate variance. Then we found our labour rate. Our standard rate of labour was up here. It was £8 per hour. So let's stick that in. The actual rate we paid, we worked out down here. It was £8.30 an hour. So we paid 30p an hour more than we planned. And we need to use actual hours because it's for every hour that we've paid for has cost us 30p more. So we're timesing it by 21,940 there. So that's the actual hours. So it's £8 minus £8.30. So a minus of 30p an hour times 21,940. 940 gives us a variance of, that's not right, isn't it? What on earth has happened there? I think I've hit the wrong button. So a minus of 0.3 times, let's just cut out the middleman here, 21,940 hours is a variance of 6,582. And we can see there's a negative in the calculator there. It's adverse. Okay, now finally we've got the labour efficiency variance to do. This is about the standard hours. Remember, that's for actual production. So the standard hours for one unit was 5 hours. We're multiplying that by the 3820. So the standard hours is 19,100. The actual hours that they took, 21,940. It's the same figure we used up there. Okay, and we're multiplying that by the standard rate for labour, which is £8 an hour. So 19,100 minus 21,940. So they've actually wasted 2,840 hours for some reason, and we're multiplying that by £8. So that actually gives us £22,720 adverse. Okay, now once we've calculated all those variants, it says, explain with examples from the results of Abel Limited what is meant by the interrelationship between cost variances. Now let's just use this as an example. There's no point talking about any others. So the interrelationship is the idea that one variance causes another, or the reason behind one variance causes another. So if we start with the direct materials price variance, we've actually paid £12 pence a metre less than we planned. Now that could be for a number of reasons. It might be because we're buying bigger quantities than we planned and we're able to get a better discount. It could be that the quality of the materials has suffered. So there are a few reasons potentially behind this variance. So we've got a favourable of 4,056. But if we actually look at what's happened with the usage, the standard quantity we've allowed for would have said we should have used 30,560 metres. We've actually used 33,800. So we've wasted a whole load of materials there at the rate of £4.50 a metre. So it could be that our favourable price variance, paying 12p less, has led to poorer quality materials, and the knock-on effect is that we've ended up wasting more. We've got more faulty units. So remember, when you're manufacturing something, anything that ends up in the bin at the end is going to cause potentially an adverse variance because it's wastage. So you're wasting not only the materials, but also the time that's gone into it as well. So if we look at what's happened with the labour rate, the interrelationship potentially between these two, the labour rate variance, we've paid them 30p an hour more. So we've got an adverse variance on the labour rate. Now that could be because they had better skills. It could be that there's a shortage of suitable labour. It could be that they threatened to go on strike. It could be that there was a hike in the living wage or the minimum wage. It could be a whole variety of reasons why we've paid them more. And you'd think perhaps because you paid more, they would have worked harder, faster. Clearly not the case here. The standard hours, 19,100, and they actually took 21,940. So they've wasted 2,000 odd hours. Each one at the standard rate there of £8 has given us an adverse variance of 22,720. So we could, form some links between what's gone on in terms of certainly the price and the usage variance. It's a little bit more hazy here because they have paid more, but they haven't got the results they were hoping for. They've got a big adverse all of these other variances. So it could be that we bought poor quality materials, they clogged up the machines, or just caused breakdowns or whatever the problem was. That led to a load of faulty products coming off the production line that had to go in the bin. So we've wasted a load of materials. It won't have any sort of impact on the labour rate variance, but it could have caused this efficiency variance. So if you've got machines that are blocked up, not running, and you're still paying your workers, you've got all this idle time that's potentially included in here, then you could find that little 12p a metre has led to the usage variance and the efficiency variance. So hopefully that's given you a flavour, an idea about the interrelationship between the variances there. So this is the examiner's mark scheme. I've just scanned a copy of it. I just can't find a copy of it on the internet, actually, that you don't have to pay for. So for that reason, I thought I'd just pop this on my screen so that you can have a look and you can just verify that the figures I've just shown you are correct. So budgeted profit, 49,000, as we worked out. There is an alternative approach there. I mean, I just went straight for contribution. Once we'd worked that out, the unit profit, unit contribution was £19. I went through and then took off the fixed costs. The actual profit, clearly identifying contribution. You can see here that the model answer takes up far more lines than the space they've given us on the exam paper. So yeah, don't always assume that they've allowed enough room. They obviously thought it was just a little two marker. And then we've got the subvariances, as I was saying, 4056 favourable for the price variance, where we'd paid 12p a metre less, and then 14580 adverse there. They've laid them out slightly differently to me, but still got the same numbers. 6582 adverse on the labour rate variance, and then in terms of hours, they've wasted 2,840 hours, so they've got an adverse variance of 22,720 there. And then if we just roll down to the interrelationship bit there, I won't bother reading all of that out, but I'll just leave it on the screen for a moment. So if you wanted to get a screenshot and have a look at it in your own time, then feel free. Anyway, as I said, thanks very much for watching. If you've enjoyed this video, don't forget to like and subscribe. Leave any comments if there are any other questions you'd like to see me go through. I'm open to requests. And good luck for next Thursday.